Good morning, everybody. We've got a mixed trade in the grain markets on Friday morning. We are beginning a new month and also a new quarter. It is 6:30 a.m. Central Time. December corn futures down a quarter cent at 536.5. November soybeans down 3 3/4 at 13.52 1/4. December Chicago wheat up 8 3/4 cents at 7.34 1/4. December Kansas City wheat up 7 3/4 at 7.39 1/2. December spring wheat is up 6.5 cents at 9.19. If you guys are listening on the podcast, as always, appreciate it, guys. Leave me a rating or a review. If you are watching on YouTube, make sure you subscribe to the channel. Make sure you hit that like button. Help me out to grow this thing. I'm also streaming live on Facebook, as I have been every day for the last couple of weeks. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. I've got a really nice subscription service that you can buy for $49 a month. I'll send you my morning email, which goes out every business day at 6:30 a.m. Central Time. In that email, you'll be made aware of every overnight headline of importance, charts, graphs, weather maps, all of my grain marketing recommendations. There are subscriber-only videos in which I really get down to detail in regard to grain marketing, strategies, that sort of thing. This is a monthly deal. Cancel at any time. As I have said before, I will not try to sell you anything else. This is a standalone product. You can buy this. You will never hear from me ever again if you don't want to, I promise. We'll get into some of the headlines here this morning. So we have some U.S.-China trade news forthcoming on Monday. Now, we have not heard much at all about the Phase 1 trade deal or tariffs or any of the stuff that was done during the Trump years. But we're going to see an update on Monday. The Biden administration is going to unveil its U.S.-China trade strategy on Monday. The new U.S. Trade rep, Catherine Tai, is going to give a speech Monday regarding this strategy for, what they're calling a troubled U.S.-China trade relationship. She took office in March, and apparently since March, so for 6 months, she's been conducting a review of Washington's policy in regard to China. Biden has kept Trump's tariffs in place to this point on hundreds of billions of dollars in Chinese imports. The final 3 months of the Phase 1 trade deal begins on Monday. The Biden administration has said that China has not met the commitments outlined in that Phase 1 trade deal. Now, in regard to, our markets here, corn and soybeans, Chinese purchases of U.S. corn for the current marketing year are record high. They're above last year by 20%. Soybean purchases, on the other hand, are down 39% versus the same period last year. So, I don't know exactly what they plan to do here, but China has still been fairly active in the U.S. markets, but they did not, according to the Biden administration, reach those commitments. So what will they say Monday? I don't know. Could it be a market mover? Probably not, but you never know. If they come out with some strategy that's drastically different, I suppose that could be surprising. I doubt that they're going to come out with anything that's like really tough on China. That would be my guess or my speculation. But we'll see what happens on Monday. That's going to be a speech on Monday that people will be watching, certainly. So we had a USDA report yesterday. This is the September 1st grain stocks report. And this is an old crop report, guys, if you didn't know that, just to give you the lay of the land. This is an old crop report. It has nothing to do with this year's yields or this year's acreage. This is stocks as of September 1st here in the United States. In regard to corn, stocks were larger than expected, and USDA actually, in regard to corn, revised the 2020 U.S. crop lower by 71 million bushels, meaning that usage during this last quarter was lighter than expected, and it was in all likelihood feed usage and residual usage. When it comes to corn demand, we can gauge exports. We get a weekly report. We can gauge ethanol. We get a weekly report, but we don't get a report in regard to feed usage. So that's usually the item that is very, very difficult to predict in regard to corn demand, and I think that that's what happened yesterday. USDA will update these numbers on their balance sheets in the October 12th report. September 1st soybean stocks were also larger than expected, so a little bit bearish also on the soybean front. Almost all of the discrepancy between the average trade guess and what was actually printed is the result of a higher 2020 U.S. soybean crop. They increased the size of their estimate for last year's soybean crop by 81 million bushels. So the trade in this instance, in the case of soybeans, was very, very good at estimating usage during the last quarter. What they could not predict, however, was that we would see this retroactive adjustment to last year's U.S. soybean crop, and that's what we saw, and that was the reason for the bearish number in soybeans. The soybean market posted some fresh multi-month lows, lowest trade since June following that report. September 1st, U.S. wheat stocks smaller than expected. So you had bearish corn and soybean numbers, but a friendly-looking wheat report. Production estimates pretty much lower across the board. The estimate for HRW wheat production was lower than expected by 31 million bushels. The spring wheat number was cut marginally. We went from 343 in August down to 331. SRW production down slightly. So the wheat numbers were friendly, and the wheat market's acting very well here. Export sales were generally disappointing last week. Corn sales were poor at just 370,000. We were 2 million at the same date last year. Total corn commitments are still record high, although the gap versus last year is closing because we've seen reduced activity in regard to sales. Soybean sales were near expectations at 1.1 million, but we were 2.6 million the same week last year. Total soybean commitments for the marketing year are down 36% versus last year, and the longer we go here, the more of an issue or perceived issue this is. The fact that export demand for U.S. soybeans is just not where it needs to be at all. Exports typically account for half of our demand base. We're running 36% below last year. USDA projects that we're only going to see a 7 or 8% decline in U.S. soybean exports this year. So we've got a problem here. And that, in my opinion, is largely responsible for the sell-off in the soybean market. The market, guys, in beans is not trading the carryout numbers that USDA has on paper. We're trading much larger carryout numbers. The U.S. stock market is in correction mode, and I guess the textbook definition of a correction is a 10% loss from the high. We're about 5.2% from the all-time highs in the S&P 500. So I suppose we're not in textbook correction territory here. Here's the daily S&P chart. We've backed off quite a bit from those highs, and the daily chart looks kind of scary, but then go to the quarterly chart, and this is nothing but a blip on the radar, this little sell-off here. The S&P 500 has closed higher for 6 consecutive quarters. We're still up 14 or 15% on the year or year to date. So the market is acting very well. I mean, corrections are necessary and healthy even in bull markets. The reasons for the corrections: traders blaming slowing growth, maybe some issues in China, fading fiscal stimulus, supply chain issues in particular. Those are all potential reasons why the stock market has seen a little bit of weakness here. We've got a new quarter starting today. We'll see if we get some new money to come into this thing. Cattle market had a really ugly action yesterday. Some fresh lows in some of these fat cattle and feeder cattle contracts. You would have thought that with the weakness in the corn, maybe the feeder cattle would have bounced back. That was not the case at all. They finished the day down more than $2 pretty much across the board. In the outside markets this morning, U.S. dollar is down marginally. The S&P is up 15 points. The Dow up 127. Bonds are up. Precious metals are mixed. We've got crude oil down 28 cents at $74.75 in the November WTI. Everybody have a wonderful weekend. I'll talk to you guys on Monday.